I'm Charlotte McLeod with the Investing News Network, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thank you for joining me once again online. It's always great to have you.
Thank you, Charlotte. Always appreciate the opportunity.
Of course. And so we're speaking just the day after Wheaton released its third quarter results. I was looking today, it looks like the market is liking what it sees. There's been a bump in the share price. So I wondered if we could start by just going through what you would highlight for investors, any numbers that you would pull out there.
Well, I think it's important, Smallwood was obviously a very important asset for us, and we did have to go through a production forecast, a revision the last quarter because of some challenges at Smallwood. But I think it's clear when you look at the numbers that the worst of the challenges at Smallwood are behind us, and we're starting to see some improvements there, and expect Smallwood to return back to its former glory. It's always been one of our strongest assets. It's always been an outperformer, and we're confident that Vale is on the path towards that, which is important when you consider that their third line is coming on towards the end of this year, first part of next year, a 50% increase in throughput capacity. They will likely be processing some lower grade material through that. So it's not going to be a 50% increase in gold production, but we will see an uptick in gold production, probably more on the lines of about 20 or 25% in total gold production. So it's pretty exciting. I think we've seen the worst of the production bumps. And when you look at the growth that we have and how it compares to the rest of the precious metals industry, our 10-year forecast, well over 30% growth from what we're seeing currently to the last 5 years of that 10-year period, we're averaging up over 900,000 ounces of gold equivalent production. So it's pretty exciting times for us. We've got a lot of projects that are getting underway in terms of construction over the next while, and we're really busy on the corporate development front. Lots of opportunities, and so looking for ways to put our capital back to work.
Okay, that's great. And, Salobo was one that I wanted to follow up on you with, because last time I think a large part of the focus of the conversation was that adjustment in guidance. So just to confirm, as we're heading toward the end of the year, the company's on track to meet that adjusted level of guidance for 2022.
Yeah, we're in good shape. We've kind of hit the halfway mark, but we expect better production both out of Smallwood and out of Constancia in the fourth quarter. Constancia is definitely biasing more towards the higher gold grade Pampacancha zone, and so with an uptick in production from both Smallwood and Constancia, I think we're in fantastic shape for a year-end result that should be pretty impressive.
Okay, well, that is certainly good to hear. I wanted to keep following up on some of our topics from last time. We also spoke about the Stillwater mines over in Montana. They had some flooding. You gave us a good overview of what was going on there. Any updates on those ones that we should know about as well?
Well, all told, the Stillwater mine itself was shut down for about 7 weeks, just short of 7 weeks, as they had to resurrect the access road into the site. It was totally washed away. And so they did get back up and running. The East Boulder operation, there's 2 different mines at the Stillwater mine, the Stillwater and the East Boulder. The East Boulder did maintain operations all the way through. And so, but we are expecting, Sibanye-Stillwater did come out with, relaxed some of their guidance in terms of the Blitz project, which is at the Stillwater mine itself, in terms of ramping up production levels. And they've sort of deferred or spread that progress out over a longer period of time. And so it has resulted in a little bit of a drop in terms of our expectations over the next few years, but long term, again, an incredible asset that has such an incredible resource life in front of it. This is going to be a mine that'll be delivering to us for many, many decades.
Yeah, and I think you reminded us at the time that the ounces were deferred; they weren't lost. So of course, that's good to hear.
Yeah, and both Salobo and Stillwater, it's none of the ounces were lost; they're just deferred.
Right, right. And so let's talk a little bit about those development assets that you started to talk about, because that was one thing that I noticed in the Q3 report. It does look very exciting there. It seems like there's a number of them that are moving toward construction. What would you pull out for us to look at there?
Well, look, both Sabina and Artemis here here in Canada, the Goose project and the Blackwater project, they're both moving forward, and very, very exciting projects. I think they'll elevate gold production in Canada to a new level with those two projects coming on stream, and both of them are actually very high margin projects that should do very well for the Canadian mining industry. Adventus down in Ecuador is also making some good progress on their projects. We've seen good project success with Marmato, with Eris Gold at Marmato, and they are working forward on the Toroparu project. And so just across the spectrum, what we're seeing is good, solid progress on moving forward on these projects.
Right. And you continue to look for new opportunities for streams, right? This is something that we've spoken about before. And I remember that one thing you emphasized was you're looking for strong operating margins, right? And I wanted to touch on that because I imagine that's getting probably harder to find given what's going on with inflation, with metals prices, but it seems like you are finding opportunities to look at. So tell me what you're seeing there, if there's anything that you can share.
Well, it's in today's market, streaming capital is actually very attractive and very competitive compared to equity. We're not seeing good, strong support on the equity side for the development companies. But most of what we're looking for, most of what our opportunity set is made up of single asset development companies. So they don't have access to good operating cash flows that can help fund that going forward. Which means that to fund their growth, they need to source outside capital, and that's usually a mix of debt and equity. Debt's getting more expensive, and equity is not really strong right now. Shareholder support for these single asset junior companies is not very strong, and so our task is to sort through those numerous single asset developers and try and find the few diamonds in the rough. And I think we've done a really good job of that when you go down the list. It's Generation Mining, Sabina, all the way across Artemis. They're all good, solid assets that deserve a second look from the investor space. But we're also very happy to stand there as a partner in terms of supplying some of the streaming capital as a source of that equity capital. And so busier than we've ever been on this front. Well over 20 projects right now that are under CA and going through review, which is the first time we've ever been over that number. I will say most of them are in the 100 to 300 to maybe as high as $400 million range, but you put a few of those in our back pocket, and I think that sets us up for even a stronger growth profile going forward.
Well, that's very interesting. So it sounds like it's really your time to shine and come and help these companies out. Do you see that trend continuing of, other entities not being interested in getting involved with this type of company at the moment?
I hope not, because it's not sustainable for the streamers to be the only source of capital. The investors do have to come back into this space. And I think that by delivering on a few good successes in terms of taking projects from the development stage into operations, by delivering those results to the shareholders that have taken the risk already, hopefully it'll set an example for other shareholders to come in. It's just not sustainable for streamers to be the only source of capital on the equity side. We do need some investor support to sort of balance how these projects move forward. And there's no doubt society needs these metals. Society, has to bring this forward. And so as long as it's done responsibly and in the right manner with respect to all stakeholders, we need to get behind these projects.
Okay, so we need to see some success from the projects to maybe encourage these firms to come back in. Do you think we also need to see some higher metals prices? Because we've talked about that before. I know you have a positive outlook for gold and silver, but levels are below where many people would like to see them.
Yeah, there's no doubt higher metal prices will help because it just attracts it. It gives those with operations more capacity to go out and expand their own growth profiles. And some of these single asset developer companies, there definitely should be targets and ultimately will be targets of the producers in terms of trying to fill their production gaps that they see 5, 10, 15 years out. And so there's no doubt that higher metal prices would help that. And we are seeing that. I mean, even, we have to keep in mind that today, what we're dealing with right now is an incredibly strong US dollar. And so when it comes to measuring metal prices, obviously a lot of our costs are based in US dollars, but if you're not operating in the United States, there are some costs that are local and you're not seeing that same level of inflation towards it. And so it seems to be working out relatively well on that front. And I think there's lots of opportunities on that side to continue moving forward, and higher prices will definitely help. And when I sit and look at the supply demand, especially for a lot of the base metals or what's now being described as critical metals, we've got a lot of work to do. And we as a streaming company we eagerly look forward to helping the industry actually deliver on those needs.
Right. And when we look at the precious metals prices, especially for gold, definitely the US dollar is coming up all the time as a very strong headwind for gold this year. For you, is that the main obstacle? Are there other factors that you are looking for that could prompt a move upward and get us out of this kind of rut that we're in?
Well, I just can't see such strength in the US dollar being long-term sustainable. The fundamentals don't support it. And so eventually those fundamentals do have to work their way through the system and lay that out. And I think that's the point that you're going to start seeing a correction in terms of how gold gets valued in US dollars. And I have to say, when I look around the world, I don't think there's been a time more important for gold and what it supplies in terms of confidence and a constant measure of value and a store of value for that matter. And in today's world, I think it's probably no more important than it has been, and for a long time. And so I think it's time for gold's time to shine is coming very soon.
Yeah, I was going to ask you if you had any words for investors who might be a little bit discouraged, because I know that we have a lot of people out there who are feeling, a little downcast. Would the word just be, patience?
I think it is patience, and never forget the fundamentals behind this. Don't let the emotions disturb this. When you look at the fundamentals, the argument for gold is stronger than it ever has been. Other fiat currencies have sort of fallen by the wayside. The euro is so much weaker. The pound is so much weaker. The US dollar is the strongest on a relative bunch, but I'm just not sure that strength can continue at the same degree it has on a relative basis. And I think that's the opportunity we're waiting for.
Okay. And, as we talk about metals prices, usually we speak about gold and silver because, of course, you're very focused on those ones. It did occur to me to also ask you about what's going on in copper, because I remembered that a lot of the streams that Wheaton has exposure to, the main metal at the mine is copper.
Mm-hmm.
So is that something that you're looking at? Can you talk about your outlook for copper, how that plays into what you're doing as a company?
Yeah, no doubt. Most of the projects that we look at, the precious metals is actually being produced as a byproduct. And so for us to be confident about the quality of the asset that we're investing into, we have to have a good feeling about the base metals that are being produced there, or as some might call critical metals. And copper is definitely a critical metal. If we talk about electrifying this planet and moving down that path, which is a requirement and is a necessity, and it's just a good thing to do. Copper has to play a role in that, along with silver, along with a lot of other critical metals, nickel and such. And so, we're very bullish on that. When we sit and look at the demand curves in terms of the expectations of electrifying the planet to try and limit the carbon loading that we're doing in this planet, I'm not sure where the copper is going to come from. And especially when I put it in the context is how much more challenging it is to actually, once a discovery is made, to actually get it through into production, to go through the sometimes very exhaustive and lengthy and sometimes project killing permitting processes in terms of moving forward. There is a real challenge that we have as a society in the fact that, we want all these metals, but we don't want it from our backyard. And that has to change. If we're going to use the products, we should take some responsibility for supplying those the minerals that are required to deliver those products. And so it's, you know, it is getting tougher and tougher to build mines and to deliver that product in, and that's only going to drive prices up as the demand continues to climb. And so we're very bullish on copper. We're bullish on commodities as a whole for so many reasons.
Well, yeah, and that's good to hear. I wondered that's brought a question to mind for me. You know, you talk about the length of time, the pacing of projects to come online. Of course, we know that it can be a lengthy process. As a company, when you're considering streams, is that also something that you're balancing, you know, getting projects that are earlier stage, mid stage, and trying to get them in the correct order so that they help you as a company as much as they can?
Most definitely. I will say that when we sign a streaming contract with a company that's developing a project, typically our streaming capital gets drip fed in during the construction process. And of course, the permitting is behind it once the construction process is started. We are doing some funding called early deposit that where we will supply some capital ahead of the permit to help go forward, but it's typically a pretty small portion, less than 10% of the total stream value. And that's more about providing some corporate support up front at probably the toughest time for companies to raise capital, which is right ahead of that permitting stage. But you know, it is something that we do watch. You know, we signed a contract with on the Rosemont project down in Arizona, which is now owned by Hudbay. But that project has been waiting for its permits for close to 20 years now. And I find it amazing that in a country, in a state like Arizona, which I'm pretty sure the license plate says the copper state, that a project like Rosemont, with the commitments and with the water efficiency, one of the cleanest, greenest copper mines to be built in a very long time, is still waiting for its permits to go forward. And you know, Hudbay is of course working their way down the copper world path to try and find a better way to move this project forward. And I think they've done a good job on that front. But it is, you know, I shake my head at, you know, the society that is forcing Hudbay down this path. I think someone's missing the boat here. And so, you know, it is a challenge. And, you know, we do try and measure that challenge or that risk from a Wheaton perspective in terms of, you know, most of our funding does go towards the construction post permit, but at the same time, I feel the pain of Hudbay as they continue to battle for trying to move projects like this forward. And so many companies are having these same battles.
That's certainly very true. And, you know, we talk about government support for, especially right now, like critical metals that are part of the green transition. But I always find that it can move very slowly. Do you think that we will see, you know, as we start to worry more about having these important metals, are governments going to, you know, get with the flow a little bit and speed up?
I'm seeing hints of that, but nothing super concrete on this. You know, we have seen here in Canada a bit more of a focus on critical metals and protecting them and so on. And I'm hoping that resonates through in terms of the challenges on the permitting front and moving these projects forward. You know, you have to understand that a lot of these companies that are trying to move these projects forward, they are single asset development companies. They don't have a wealth of capital to fund this duration, this time. And it just makes it very challenging to get through the whole process and be able to afford it. And so it's just something that we have an opportunity here in Canada to deliver the cleanest, greenest minerals in the world. One of the toughest regulated and strongest regulated, which is good. One of the most environmentally sound frameworks that we have here, good, strong structures with respect to leaving sustainable benefits with the impacted communities around the mine sites. We can provide the cleanest, greenest minerals around the world, but we continue to put up roadblocks, and all that does is shift production to more challenging jurisdictions. And it's frustrating as someone that works in the resource industry, but someone that also appreciates the potential impacts that really has on the worldwide side. Shifting production to areas that have less regulation is not a winning solution.
Yeah, well, if you're seeing a little bit of movement, that's at least a bit encouraging for me. So thanks for going through that. as we're wrapping up, I wondered if we could talk a little bit about 2023 plans from Wheaton. Obviously, we know you've talked a bit about some of the operational improvements at the assets. You're looking for streams. I know that you've also been doing, I don't know if it's right to call it a cleanup, but with the Alexco and the Glencore streams. So I wondered if you could share any plans for next year that you think investors should be aware of at this time.
Well, no more divestments. I can assure you. Those two assets were assets that were near the end of their, profitable lives with respect to streaming perspective, and it just made sense for us to collapse those out and sort of clean up our own portfolio, so to speak. And the capital that we received from that, very good, strong capital. Hecla is going to have great success up at Keno Hill. It's going to become, with the backing that they've got, I think they'll do very well up there. And of course, Yaliyaku will wind up likely owned by a private Peruvian company and continue providing jobs and minerals in the Peruvian space. But definitely a cleanup on our portfolio perspective. No more divestments expected. The rest of the portfolio is doing very well on an operating margins basis, and we're quite comfortable with where we are. So we're going to take that capital and we're going to put it back to work. And my predictions for 2023. Definitely a few more acquisitions. With the amount that we're looking at right now, we've already gone exclusive on a couple. So now it's a matter of just getting to the point of signing, and sometimes that happens, sometimes it doesn't. But I'm expecting the first half of 2023 we should have another flurry of new acquisitions. Again, the bulk of them are development projects moving forward. So we see that as being our path for the near term is funding these single asset development companies. But I love the fact that it gives us a production profile that has us up over 900,000 ounces per year. And with a few more acquisitions, we should be able to make that million ounce per year gold equivalent basis sometime soon. So we're pretty excited. 2023 looks like, especially with the existing portfolio, the growth we're going to see, we should be back up well over 700,000 ounces of gold equivalent production, and continued growth from a number of different projects. Pretty exciting times.
Definitely exciting. I think the next time that we talk is probably going to be in 2023. So we'll be looking forward to that. Any final words that you would leave people with as we head toward the new year?
Well, I just reinforce the growth profile that we have at Wheaton. The next 4 or 5 years is going to be incredibly exciting as we continue to ramp up to a new level of production. And again, entirely focused on precious metals. There's good, strong growth on both the gold and the silver side. These are really good times to consider Wheaton as a way of getting some precious metals exposure into your portfolio.
Okay, perfect. Thank you so much for sitting down to share with us today. Great to hear from you as always.
Thank you.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Randy Smallwood with Wheaton Precious Metals.